Becoming front and center with the White House, with key staff members close to Mike Pence getting coronavirus, and we're just days away from the U.S. election.
The FTSE down by about 0.25% in early trading. We'll get the equity benchmarks across Europe open in just a moment. I think the story of the morning is what's happening through the bond market in Europe. And what is fascinating is to see the BTP, the Italian 10-year, with a bid. Yields coming down 8 basis points. Some real sovereign-like behavior on a really tough morning. There's the move over in Spain, off by 1.44%. Down, as I say, on a FTSE, off by 1.3%. Bid coming in to the bond market, real risk aversion. You see it at the long end of the German curve, a 30-year yield that comes down another 2 basis points to about negative 18 basis points on the session. Anne-Marie, that bid is back in the bond market for very good reason. In places like Germany, places like Switzerland, places like the United States, there is real concern about this second wave across the continent and what that means potentially for a second dip in this economy.
Yeah, certainly is. We're seeing fresh curfews as well. And in Italy, the strongest virus restrictions since they had a lockdown in May, and they had some of those draconian lockdown measures we saw, Jonathan, following the breakout in the spring.
So if you're just tuning in about a minute into the session here in Europe, this is what things look like right now. Waking up to some risk aversion Monday morning, sending the equity benchmarks across the continent lower. The FTSE MIB in Italy down 1.7%. The IBEX in Spain off by 1.4%. The FTSE here in London down by 1.2%. In the FX market, you see this reflected in a stronger dollar story. Euro dollar off by 1/3%. Cable off by 1/4. Much more pain going into the Aussie. And as I've talked about it repeatedly through the morning, it's the move in the bond market that gets your attention. 30-year yields over in Germany down another 2 basis points. In Switzerland down another 2 basis points on a 10-year. And even Italy getting a bid on some real risk aversion across Europe. That's the picture of European markets. Pressure on the ECB meeting this Thursday. Policymakers in Frankfurt likely to discuss the impact that the spike in virus cases could have on Europe's recovery and whether more stimulus is already needed. We start the conversation this morning with Paul Brain, Head of Fixed Income at Newton Investment Management. Paul, let's start right there. The pressure on Christine Lagarde this Thursday, I'm not expecting them to do something, I don't know if you are, but just walk me through how much pressure is building on this central bank again.
Yeah, I think I agree with you. I don't think there's much going to happen at this one because I suppose the rising cases is a little bit too soon to change the direction of the ECB so quickly. But essentially, yes, you're right. If we're going back to more severe lockdowns across Europe, Europe is going to require more stimulus. But I think the stimulus is more focused on the government. So it's more like the government's doing the fiscal stimulus, providing support than it is the central bank. The central bank has done an awful lot of work, a lot of heavy lifting in providing liquidity. There's not much more they can do. They can make sure that the wheels of the system are still working, but essentially the cash has to come from governments now directly into economies if we go into a more serious lockdown that threatens economic growth.
Good morning, Paul. Is there any doubt which program the ECB will favor? Because, of course, under the new pandemic relief program, there's a lot more flexibility on that bond buying.
Yeah, it's a good question. I think they've got enough tools to make sure that the bond market is working. As you mentioned this morning, it is working. Italian yields are falling rather than rising, so they don't need to do too much to make sure that the very low, aggressive negative yield strategy is working across all countries, across all markets. And perhaps they can do more on the corporate side. They've got various programs that enable them to buy corporate bonds. We may see more of that if we feel that companies, or if they feel that companies require the cash, require the money, if they've got any problem with companies borrowing. And essentially, I think the wheels are working fairly well within Europe, within the system. Of course, they started their SURE program issuance last week. They've got a lot more to do there. That money has to be actually get out into the economy as well. So that program is going to take a while to get up to levels where it's stimulating the economy, but it's there and it's up and running, it's working. I think we're going to see more issuance coming there, obviously, and we're going to see more money flowing into the economies. But I think I'm quite encouraged that actually we are seeing broad falls in yields across the whole European sovereign spectrum.
Hey, Paul, stick with us. I just want to run through the price action just quickly. The DAX opening up down by 2.7% about 5 minutes into this session. The FTSE off by 1.1%. The pain you see, though, for the equity longs at least, is really across the European indices on the continent. The CAC 40 in Paris, France off by 1.3%. Equities really rolling over and rolling over hard, though, as Paul points out, I think it's really, really constructive on a morning like this morning, seeing this price action in equities, to still see the periphery firmer. This is about the recovery of Europe. It's not about the breakup of Europe, and that's an important distinction to make this morning. And Marie, nevertheless, to see the DAX shaving about 337 off the benchmark over in Frankfurt, Germany, it's a tough morning.
Yeah, it's a tough morning for those companies trading on the DAX. John, take a look at some of these movers right out of the gate as the DAX opens up. SAP, and we spoke to the CFO, that stock is down some 20% this morning. There you have it, a little bit over 19%. And this, of course, comes as S&P cuts their 2020 outlook. CFO Luca Mucci, though, said to us he's quite comfortable at the moment where they are. Bayer this morning down 0.9%. They're inking a deal, a biotech company out of the United States for about $4 billion. And then finally, we do have AstraZeneca getting a little bit higher, up 0.5%. Some good news on the vaccine front. Their University of Oxford vaccine, in collaboration, they've produced a robust immune response in elderly people. Yeah. And of course, this is according to the Financial Times. And we're going to be looking at, well, as Johnson & Johnson. They may be rebooting as well, Jonathan.
Let's hope we get more good news there, Anne-Marie. But to see SAP down 20% on a morning where 20 minutes ago the CFO's on this program saying we're not unhappy with the numbers, we're comfortable with where we are. If you're an investor in this stock this morning, I don't think you're comfortable seeing it down 20% in early trading. Paul, we talked a little bit about Europe. There's a huge distinction to make between a recovery that's breaking down and the potential breakup of Europe. Now, for the places like Italy, Spain, Greece, and elsewhere, as you look at the periphery, Paul, are you confident that we have made that pivot away from sovereign debt in Italy, Spain, and across the periphery behaving like a credit and now starting to perform like sovereigns?
Well, I think the important distinction is that this is a European problem, not just a southern peripheral European problem, that, as it were, it was after the crisis, the Eurozone crisis. And it's affecting those countries in greater numbers, of course, but I think it is something that is seen as being a pan-European problem. And the other thing, of course, is the response is pan-European. We're actually seeing joint issuance of bonds now. So I think that's a sea change, regime change, if you like, that was put in place in the summer to support the European bond market. And I think that's the bit that's keeping that sovereign bias to the broad European bond markets rather than just buy Germany and sell Italy trade, which was in the Eurozone crisis. So I think there's a clear distinction now that they're in it together. There's a crisis they're fighting together, and they're doing the ECB support, and also the fiscal support is a little bit more joined up now than perhaps it was before.
You're concerned about the supply and demand dynamics changing at the second quarter of next year. Higher inflation, higher bond yields. Why do you think it's 2Q of next year?
Yeah, it doesn't feel quite like that right now, does it? Of course, we're going into another wave of lockdowns.
Exactly.
And clearly it's all about, how do we actually protect capital for the next few weeks and maybe a few months. But I think after that, I think once we get through this wave, if the hospitalizations don't rise to the same sort of levels, if deaths don't rise to the same sort of levels, I think we have to, we'll get more waves like this coming through. But I think the economies gradually reopen and get back to normal. It's inevitable that if you're a politician, you're not going to lock down economies unless you have to, but you probably have to just in case the statistics are wrong, etc. So I think we have to go through this phase, and then after that, we're looking at a broader economic recovery that is fed by that monetary stimulus, which is immense, and also fed by the fiscal stimulus, which is building and is still quite supportive, will be well into next year. And it's that mix of monetary and fiscal stimulus that I think leads to the potential for a modest increase in inflation expectations. When I say modest, I think in Europe you're looking at 2%, maybe plus 2% at best, but a more consistent plus 2% rather than a 0 or negative to 2% level that we've had obviously through this crisis and the one before. So I think that's the change, that's the issue. And of course we've got a lot of supply to work through. If we've got stronger economies with higher inflation expectations and more government supply, inevitably you're going to get higher bond yields, higher government bond yields.
Tough start for the equity market. Every single sector on a stock 600 in negative territory. Tech stocks down by almost 6%. The DAX off by 2.5%. The FTSE trimming its losses. 10 minutes in, down about 0.5%. Big week for European earnings still ahead. Big names in banking, pharma, and energy report in the coming days. Up next, we discuss the earnings outlook for the continent. From London, good morning to you all. Equities lower. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
throughout the advanced countries, the pace of economic recovery is slowing. And I can't think of any exception to that general statement.
Queen's College President of Cambridge, Mohammed Al-Arian there, weighing in on this market and on this economy. Looking at this price action this morning, it is a tough start this Monday morning. Good morning to you all. We're down 2.5% on the DAX in Frankfurt, Germany, off by about 0.5% on the FTSE. No doubt a weaker sterling helping things out, a stronger dollar through all of G10. Bit into the bond market, treasuries firmer across the continent, big rally, Germany, Switzerland, even Italy catching a bid this morning. Risk aversion to start things off this Monday with your stock movers. Back with us, here's Danny. Hey, Danny.
Hey, John. Well, a big turnaround compared to what Lufthansa did last week when it reported narrow losses for earnings. Those shares had gained 12% last week. Today, we're looking at big declines in Lufthansa's share price, down nearly 3% after a report from Handelsblatt saying that they're cutting more flights. They're going to temporarily close some of their administration operations because of weaker demand. That all from an internal letter sent to employees, so shares continuing to lose. But look, the big mover today, by far the biggest loser for the stock 600 is SAP. The CFO telling you, John and Anne-Marie, that he's not unhappy with the numbers that they reported. Well, Oppo analysts saying it's difficult to find positive news in this release, perhaps save for free cash flow. Their cloud services business, according to Bloomberg Intelligence, it looks like they're losing some of their market share. Their Concor business travel segment, limited visibility there with continuing rises in coronavirus cases. So SAP, if it keeps up this declines, it will be its biggest intraday decline since 1996. But it's not just SAP. SAP also taking down other cloud company businesses with it, including Capgem, the France-listed business, falling more than 3.5%. This will be its biggest drop in 6 months. Now, Capgem, of course, as I said, is involved in the cloud services space. It also has a partnership with SAP as well. So bad news for SAP is also bad news for Capgem. Anne-Marie, John?
Danny Berger, thank you so much. Now, we want to discuss the earnings outlook with Europe with our guests. It's a busy week in Europe. Numbers due from a number of sectors, banks, big pharma, energy as well. Paul Bryan, head of fixed income at Newton Investment Management, still with Jonathan and myself. Paul, earlier, many were thinking that companies were sounding far less negative. SAP, though, their last outlook, they assumed economies would be reopened. It's not even November, and we have fresh emergency restrictions around Europe, record daily cases coming out of the United States. Do companies now need to start reconsidering that this is going to be painful on the economic side and on the data side in terms of high-frequency data about what consumers can actually do and have to recalibrate their earnings outlook?
Yeah, I think I'm probably a little bit surprised, like you are, at the reaction from companies going into this quarter. I think most of us have been talking about the possibility of a second wave. Most of us have been worrying what will happen if there was a further lockdowns, renewed lockdowns. But clearly companies probably had focused a little bit more on the recovery opportunities. And I think generally, we've all been debating V-shaped and U-shaped recoveries. I think we're looking at a U-shape or a gradual recovery that has the occasional 2 steps forward, 1 step back, and this is clearly a 1 step back. And I think companies probably maybe need to get a bit more realistic. I think the other concern is that it's just the length of this crisis, the length of this, let's say, hit to business. The longer it goes on, the greater the chance that companies won't make it, will effectively have to resort to cost-cutting, laying off staff, et cetera, and we're seeing that coming through already. And I think that's probably what companies hadn't necessarily planned for, because obviously it's too negative a scenario, and most companies don't want to do that. But we need to do that. I think that this is going to be a tough winter for the economies and therefore the companies that are involved in that. And I think as we get through into summer of next year, it's going to be better, but we've got to get through this one yet.
So, Paul, let's talk about how you want to allocate to a lot of these issues right now, where in the capital structure you'd like to sit, whether you want to allocate to equity versus credit. I caught up with PGIM in the last couple of weeks, and they're calling this the golden era for credit, that the C-suite will have to manage the balance sheet for debt investors and not for equity investors. Paul, what's your take on that kind of conversation? Because I'm sure you've come across it many times in the last several months. What's your view?
Yeah, I mean, just broadly speaking, I think you're better off in credit than you are in equity at this level, only because the companies that want to survive have got to pay the interest rate going to pay the creditors, and they can cut dividends, they can pause forecasts, credit forecasts, and so on. So I think the equity share price, or the share price of companies, is going to be a lot more volatile than credit. The investment grade credit market, we find, is offering less value, less opportunity than it used to, and also it's what that classic market where if we do get an economic recovery, you're going to lose money because government yields rise and you get a very high duration interest rate risk. And of course, if we do get into a much more serious economic decline, then we will see downgrades, and you'll see those fallen angels, a number of fallen angels rise. So we prefer, when we come to credit, we prefer the high yield space. So our policy has been to build gradually exposure to the high yield market, but we have paused that because of the current mood in the market, let's say the current concern about the second wave, and also just other risks such as Brexit and the election.
Just in terms of where in high yield, Paul, a sweet spot for many people has been that double B pocket, just below that line in the sand between IG and high yield. Is that where you want to be too?
Well, more actually, I would say we've been slipping into single B territory. And double B is what we've owned for a while because it's a safer high yield. But it's probably one that is a little bit more threatened if you do get fallen angels. It's one that has to reprice to the new supply coming into that sector. And I think it's a single B area where you've got to do your credit analysis really well, because not every company is going to make it. But that's where perhaps the value is. That's the sweet spot.
Hey, Paul, great to catch up. Appreciate your time this morning. Paul Brain there, Head of Fixed Income Investment at Newton Asset Management. This price action shaping up as follows. Equities down hard, off by 0.25% on the FTSE on the continent. The DAX off the lows, but still down by more than 2%. Bit into the bond market, stronger dollar. That's how we start things off this Monday morning. Coming up on the programme, moving the goalposts. UK banks tightening lending standards for mortgages as buyers look to beat the stamp duty holiday. Up next, we discuss British banking. Right here from London, this is Bloomberg. monetary policymakers as well, Jonathan. What's going on here?
Well, I mean, the UK mortgage space has been a very interesting one because if you go to the very beginning of this year, you actually had the Bank of England telling the lenders, look, 95% loan to value, we think you guys are lending too much. And then obviously the virus struck. But because of all the pent-up demand, house prices have shot up since then. And so the lenders have already pulled back from 95%, 90%, and they're now pulling back on 75% loan to value mortgages. That all makes sense because they're looking at values and saying, no, we don't trust this market. I think the other problem is you've got a huge bottleneck in the people who are trying to take advantage of the stamp duty holiday. Basically, if you haven't got your deal done and your mortgage in place now, you're not going to make the March deadline. So not really surprising. It's something we've written a lot about over the past 6 months. So I would almost say the FT a little bit late to the party here because we've seen rates going up and up and up across the different loan-to-value buckets over the last 6 to 8 weeks.
John, we've seen rates go up, and we've seen rates go up before, and we've still seen housing bubbles carry on expanding. Not for me to say that this is one. I just wonder, John, from your perspective, looking at the financials at the moment, is there a financial stability risk building up a little bit here, going into spring next year?
Well, we've absolutely got asset bubbles, and housing it was always one. Look at Sweden, look at the UK. But I think if you think about it from the bank's perspective, the bigger banks have managed to set aside a fairly hefty chunk, particularly look at Barclays last week. Bumper FIC is funded, like in the US, funded a lot of comfort in provisions. For a lot of the banks, take the Irish, take some of the smaller Spanish, we still don't know actually whether their confidence in the first half provisions they've taken will be enough, because unfortunately their P&Ls are so small relative to the size of their balance sheet that even if they get it a little bit wrong, it's going to be pretty ugly. So all we're going to see is a sort of further divide between the strong banks, the Nordics, some of the larger Europeans, but not even the Santanders and BBVAs. Even there you've got an awful lot of credit risk. And the smaller, weaker banks. So there's certainly an issue for the regulator here because things like restarting dividends, you can't really tell some of the big, strong banks you can't pay anything, but equally you do not want some of the smaller banks to start paying.
Jonathan Tice of Bloomberg Intelligence, thank you for joining us. We'll have more from you throughout the week. We have HSBC as well as Deutsche Bank on tap this week for earnings outlook. John?
Anne-Marie, let's get to that price action. 26 minutes into this session, equities down. They are off on the S&P 500. Futures are lower as well as we inch towards the US Open. But here's the European session. The DAX down by 2.25%. The FTSE off by 0.4%. And in the bond market,
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Minutes into the open in the City of London this morning. Good morning to you all. Here's the price action. We head lower on a FTSE, on the equity benchmark in Frankfurt, Germany, on the DAX, and on the Stock 600, we're down by 0.9%. Earlier in the session, every single sector trading in negative territory. On a FTSE, it's the miners, it's the energy players. Shell off by more than 2%. Rio off by 1.3%. BHP off by 1.8%. Anglo down 1.9%. You get the picture. Risk aversion bleeding through the equity market into the bond market. Government bonds bid into the FX market, the euro softer, the dollar firmer through much of G10. That's the price action. Here's your first word news with Laura Wright.
Thanks, John. On that note of risk aversion, Italy is introducing its strongest virus restrictions since the end of the national lockdown in May. It will limit the opening hours for bars and restaurants and shut entertainment, casinos and gyms. Spain is imposing a curfew from 11 p.m. until 6 a.m. The World Health Organization is warning of a dangerous moment for many countries in the Northern Hemisphere. The deadlock over stimulus on Capitol Hill seems to be continuing. Both House Speaker Nancy Pelosi and the White House are blaming the other for moving the goalposts in talks. Pelosi says the chamber may pass a pandemic relief plan this week, but the Republican-led Senate may not act before the election. BTPs are rallying this morning after the S&P upgraded Italy's outlook. The agency left the rating unchanged but boosted it to stable. That makes a downgrade to junk less likely, giving the country some respite. Italy is one of the region's most indebted countries with a debt-to-GDP ratio of close to 160%. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. John and Marie.
Laura, thank you very much. Those BTPs are certainly rallying, down 7 basis points on the yield. Now it's time for your Brussels edition. It's your need-to-know guide to the week ahead in European politics. The latest trade talks between Britain and the EU have been extended into the middle of this week. EU Chief Negotiator Michel Barnier now set to stay in London until Wednesday. Let's head to Brussels and Bloomberg's Maria Tadeo, who has an interview for us. Maria, good morning.
Exactly, Maria. Good morning to you. Extended until October 28th. And the idea here is that by mid-November, that is a new target. That is a move-in deadline. We could have something on paper that could provide the basis for a deal. And to talk about this, we are joined by Philippe Lambert, who is a member of the European Parliament, but most crucially, he sits on the Brexit steering group here in Brussels. And Mr. Lambert, just this idea that Michel Barnier has decided to stay for longer now in London, how should we look at that? How do we interpret this?
Well, that we have entered the final stretch of the negotiation. I think that that indeed the British government ultimately wants a deal. So we are going to do our utmost to have one. I have limited hopes as to what that might entail, but at least now the perspective is that we might have a deal after all.
Right, you say the UK government now wants a deal, but how about Europe? Do you want a deal? And most crucially, when do we get it? Do you think mid-October? Is that realistic?
Well, there's never been doubt as to whether the European Union wanted a deal. We do want a deal, not under any conditions, but we want one. but there were doubts as to who would win in the entourage of Boris Johnson, the hardliners who actually want to cut all ties with the European Union, or those who want a more cautious approach respecting geography, in that the European Union is the closest neighbor to the United Kingdom. Now, both parties, I think, want a deal. Can we have one by mid-November? Yes, we can. The question is how deep will be this deal, and there I would have limited ambitions. I mean, this won't be as good as the membership of the European Union. In other terms, even if you have a no tariff, no quota agreement, there will still be checks at the borders, regulatory checks between the United Kingdom and the European Union, and that will indeed create friction in trade between the two.
What would you say is now the main sticking point? I wonder, because we've heard a lot about fish, and we know the French have taken a very strong, tough position on that. So what is the major sticking point that's preventing the deal at this stage?
Well, it's not fish. Fish is of course symbolically big, but economically small. The real thing is about level playing field and the way you enforce this. So it's the governance aspect linked with the level playing field provisions. And these are major sticking points because, of course, the United Kingdom doesn't want to be forced to align to EU legislation. But on the other hand, if it wants to keep access to the single market, it has, in a way or another, follow EU legislation. So how do you do that without the hard Brexiteers losing face? Well, that's the whole question.
And you talk about fair competition, so I do wonder, in a world where there's a trade deal and the UK has fully left the European Union, how much do you fear the UK as a competitor to the EU?
Well, I don't fear it. I mean, the United Kingdom is part of the single market at the moment, and we have nothing to complain about. Of course, we don't like a number of provisions of the UK labor law, but in environmental terms, for instance, well, we might see the United Kingdom being more proactive than some member states like Germany. So I'm not too much afraid of that, especially as we are talking about trade in goods, not trade in services.
And when you talk to officials here in Brussels, the more hawkish voices do say that ultimately the Prime Minister does need a deal more than the Europeans do, that this is going to hurt the UK economy more than it will hurt the EU. And this is happening while coronavirus is happening, so he has no other option but to get a deal. Is that a fair interpretation, would you say, of the Prime Minister thinking at this point?
Well, I'm not in Boris Johnson's head. I think that the predicament of the United Kingdom is dire at the moment, obviously, and it's true that no deal would hurt proportionately more the United Kingdom than the European Union, but I think that language, to the extent that the United Kingdom is cornered and has to make all the concessions, is not conducive to a deal. So I would refrain from using that kind of language because I think it's in both parties' mutual interest to have a deal.
Mm. And I have to ask you about the calendar because here it really does matter. The transition period will end by the end of the year. So if we assume best case scenario that we do get a deal by November, when does it get put to a vote in the European Parliament and how easy will that vote be approved or be pushed through?
Well, it really depends on the quality of the deal. Personally, I have a lot of trust in our negotiating team led by Michel Barnier. So far, we have had no surprises from his side. And since he consults with the European Parliament more than weekly basis, there will be no surprises. And so I guess that the deal will be approved by European Parliament, unless, of course, we have surprises in terms of concessions made by the EU negotiators that would be unpalatable for the European Parliament. But I don't think that this scenario is very likely.
Okay, so when is the actual deadline? I mean, when's the real deadline here?
Well, actually, we really need that in the first half of November because, well, there's a due process to be observed. I mean, the Parliament is not an instance that is just a rubber stamping document. So we have to have at least 4 weeks to process this correctly. And by the way, don't forget that the British Parliament has to process the treaty as well.
Which was my next question, by the way. How problematic could that be? We know it was very problematic in the past. Do you think it can get approved easily? Is that something that worries you at this point or not?
No, I'm not worried about that. Boris Johnson enjoys a big majority, and despite all the infighting, I think that should be no problem for his majority.
And Mr. Lambert, just a very final question. If you look at financial markets, they have completely almost ruled out that we don't get a deal. They believe a deal one way or another is gonna come. They're pretty certain about that. Would you say they're wrong?
Well, again, a week ago, I thought that the no deal scenario was the most likely, and I've been thinking that for months. But then we had this late turnaround of the British government, where actually they used a speech by Michel Barnier to backtrack from earlier statements. And that speech actually didn't say anything new, except that they wanted to portray it as a sea change in the EU's attitude, which was not. But that told me that actually the British government, after all, wants a deal. So I would say that the Realos have won the ear of the Prime Minister, and therefore they are seeking a deal, which now leads me to believe that ultimately we're going to have one. Not a very ambitious one, but at least one that will avoid the UK crashing out of the transition period on January 1st.
Well, Philippe Lambert, thank you so much for joining us on Bloomberg Television. And it's always interesting to see the disconnect between what you hear from the politicians and what the market is actually pricing in. Anne-Marie, John.
Maria, thank you. Great work, as always. Beyond tedious following all of this for all of us, including you, I'm sure, who's got to cover this every single day. And we have a new headline, a new deadline. The first part of November. I can hardly wait to see what happens with those Brexit discussions. Here's the price action, 40 minutes into the session in the City of London. Good morning to you all. We break down on the FTSE. We are negative on the Stock 600. We're down 0.9%. S&P 500 futures, remember, 4-hour time gap this week between London and New York. On futures, we're down 34, down almost 1%. Bid into the bond market, risk aversion, down 4 basis points on 10s, just about holding above 80 basis points on a 10-year. And elsewhere, in the FX market, the US dollar stronger against the bulk of G10. The Bloomberg Dollar Index up 1/3%. Coming up on this program, we'll hear from our interview with outgoing UBS CEO Sergio Ermotti and his legacy at the bank. That's next from London. This is Bloomberg. 43 minutes into the session, equities lower this Monday morning. Here's a picture of things for you. Down 0.5% on the FTSE 100, no doubt helped out by a weaker pound sterling this morning in foreign exchange. And G10 dollar stronger on the DAX, off by 2.4%. It is not looking good across the continent right now. The CAC 40 off by 1% in Paris, France. We're down by 52 points there. Over in Switzerland, after 9 years at the helm of UBS, it's Sergio Maltese, last week at the world's largest wealth manager. He's one of the longest serving bank CEOs in Europe. During his tenure, one of the key questions has been whether European lenders can ever catch up to Wall Street.
Look, as you said, it's very difficult to predict, but what we see and what clients are telling us for Wall. I mean, you're going to see changes. You're going to see asset allocation shifts. You're going to see new policies being implemented. Even if the current administration is confirmed, probably they will need to make changes.
Do you think that could level? You always kept saying to me in quarterly interviews, "Oh, Manus, it's an uneven playing field. I'm comparing the wrong things." So could that be a constructive thing, where maybe the playing field gets a bit more level for Europe versus the US?
We'll see. No, I think that Europe. Is it Europe improving, or is the US basically losing ground? We'll see. I think that it's difficult to see how Europe can gain grounds from where it is today without a significant shake-up of its system, and the U.S. is still not to be underestimated, because it's always been able to come out somehow stronger from any changes in administrations or politics. So but of course, maybe at the beginning you may see some dislocations when changes come through.
9 years, long tenancy. What did you enjoy the most in the past 9 years on the job, Sergio?
Well, I would say that I enjoyed most of the days, and the fact that it was always something new. I think that the early days was managing the aftermath of yet another crisis for UBS, and then starting to reposition the strategy and working on the execution and getting tractions with employees and clients was the first focus. But then, over time things have changed a lot. I have to say that I'm not so sure I enjoyed that a lot, but I spent a lot of time in resolving legacy matters, so that was probably less of an interesting part, but still, at the end of the day, a necessary part of my job.
Well, if we look back at the strategy, I mean, you're probably going to be remembered most for downsizing the IB. I look at your trading background in your career. Did that give you additional insight when it came to downsizing the IB?
I think so. Not necessarily the trading background, but the fact that I've been working for many years for a very large investment bank, and also later on I was still involved in doing investment banking businesses before joining UBS, reinforced my belief that you will need to be a one-stop shop in order to be successful in the investment banking world. And in that sense, I knew that UBS had excellent capabilities in equities, in FX, in equity capital markets, in M&A, and strong franchises in Europe and in Asia, and they were good and enough to sustain a business model that would serve well clients and shareholders.
UBS CEO Sergio Armati, he'll say goodbye to UBS this weekend, and that's when you can also watch the full interview then, conversation between Sergio Armati and Manus Cranny. And Manus has been following Sergio basically his entire helm at the bank. Now let's take a look at your week ahead. Later today, the WTO holds a dispute settlement meeting. It's expected to grant the EU legal authority to impose retaliatory tariffs on $4 billion of U.S. exports. Then tomorrow, HSBC, they had up a long list of banks reporting this week. We're going to be watching also for earnings from Santander and Mediobanca. And then on Wednesday, the CEOs of Facebook, Twitter, Alphabet, all expected to testify before a Senate hearing on hate speech, misinformation, and privacy on their platform. And then, of course, what Jonathan and I have been talking about all morning, Thursday, the big one, the ECB rate decision. It's the comments. We want to hear from President Christine Lagarde, who's about to celebrate her first anniversary at the helm. And then on Friday, another slew of bank earnings. BBVA, CaixaBank, NatWest Group, Banco Sabadell, they're all reporting. So a very busy week in terms of central bank and earnings. And joining us now is Richard Jones, Bloomberg's MLive FX and rate strategist. Richard, let's first start with the price action today. Lower equities, lower yields. You say this is the blueprint for what's to come. Explain.
Yeah, good morning, Anne-Marie. Yeah, I think what we're seeing today in stocks and in the drop in U.S. Treasury and German bond yields today, I think it could be a blueprint for the price action that we're going to see in the coming weeks and months. I mean, I think what's happening specifically today is I think there's disappointment that it looks like we're not going to get near-term fiscal stimulus in the U.S. I think there's finally the market has given up hope on that. But also, I think you combine that with just the sheer scope of the pandemic surge in the U.S. and Europe. It's starting to become really evident to markets. I think every day goes by, we get record daily infection numbers on both sides of the Atlantic. You've got governments unable to sort of stem the spread of the virus, and I think all of this is starting to sink in with markets. And so, I think there's still optimism out there that perhaps we do get this blue wave that a lot of people are talking about, that fiscal stimulus will be coming in the U.S. But it's not going to be a near-term thing. I think we probably realistically only see a robust fiscal stimulus in the U.S. in the early spring. So that means a long winter ahead of us. I think that markets are...
I think we just lost the line there with Richard Jones, our Bloomberg MLive reporter. Richard Jones there on the markets. Rich, great to catch up with you, sir. At least I didn't get to talk to you. Though, Anne-Marie, I think the key story for me at the moment is not what's happening in equities we break down. It's what's happening in the euro, or rather, what isn't happening. It's pretty clear right now that the euro and the European economy is facing some real challenges. Euro-dollar still north of 118. We've got a second wave, potentially a second dip, and we have a resilient euro in the middle of that over the last several weeks.
Yeah, certainly, 118.21. It's only a little bit softer against the dollar, but it's still pretty strong. You have to think, John, what does this strong euro say to Christine Lagarde when she meets with the Governing Council on Thursday? Are they going to have to do another, coming in with verbal intervention if the euro continues to go towards that 120 level?
That's the conversation for Thursday. Up next, away from the markets, a special guest will be joining us. There's a reason I'm here, and Matt Miller is not, and that's because Matt is a new father. We can do that next on this program, and hopefully we can hear a little bit on the markets from Edna. We'll do that next right here on Bloomberg.
climate change is the defining issue of our time. So we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
In Germany, doing his part for the demographics of Germany, our anchor of the European Open and brand new father, Matt Miller, joins us right now. Matt, congratulations, sir.
Good morning. Good morning. Thanks so much, John. Really pleasure to be on my show with you. And of course, the probably greatest pleasure of my life so far to see this little packet of joy born on Friday night. Really an overpowering moment and puts a lot of things into perspective.
Matt, she's so adorable. And I remember, oh, look at her there. Oh, Matt, it's very, very cute. And I remember actually when you and Maru met, I was there that evening. So it's kind of nice to see it come full circle. Matt, since you are in Germany, what's the latest on the COVID restrictions? Jonathan and I have been talking about what's going on in Italy and Spain and the UK, but what's the latest out of Berlin?
Well, before I get to that, I'll just point out, Maru and I met probably in the most markets way possible. She was touring the floor of the New York Stock Exchange, and I was working down there. 8 years later, we give birth to a 7-pound, 6-ounce baby in Charité Hospital in Berlin. In terms of what's going on here with the coronavirus, of course, just like the rest of Europe, it's getting worse and worse. And because my world now fully rotates around babies, my immediate thought was, I wonder if more people are going to have babies, as we go back into lockdown. But I saw a really interesting study a couple of days ago that fewer people are going to be, or that people will be having fewer babies because they're going to wait longer to get married.
Matt Miller, we've got to let you go, sir. There's still a hard break, but it's fantastic to catch up. Congratulations. I remember some of the nights out we've had, and here we are, Matt Miller, a new father, and getting me to feel...
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Viral surge in the West. Spain declares a state of emergency and a national curfew. Italy and France post record infections. U.S. cases hit a record for the second day. Vaccine hopes. AstraZeneca's candidate produces an immune response in the elderly. J&J says its first batch may be available by January. And blame game. Nancy Pelosi and Mark Meadows accuse each other of moving the goalposts on stimulus. The House Speaker says the chamber could pass a pandemic relief plan this week. Well, good morning, everyone, and happy Friday. The clocks have changed in Europe. They have not changed yet in the U.S.
Right.
Tom Keane in New York, Francine Lacqua here in London. Tom, there's a lot to talk about housing at our top stories today. We do need to mention Brexit just because they're still negotiating. We need to look at European stocks because of SAP. But really, it's 8 days until November 3rd, and we all know what happens on November 3rd.
Beatles 8 days a week. That's what it is. It's truly an 8-day week in the United States. No question about that. On a Monday over to that first Tuesday of November. The news flow is still extraordinary, but I've really got to go to the markets, Francine. The risk-off feel here is tangible. You saw what SAP did in Germany. That was ugly. What if you bought shares Friday? Ooh.
Yeah, and actually, we understand that it could probably infect or at least touch a lot of the other European stocks. And then we have that IFO, October German Business Confidence, 92.7, pretty much in line with estimates. Now, we'll have a look at the markets shortly, but now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom, House Speaker Nancy Pelosi says the chamber could pass a pandemic relief package this week. Still, a deal with the White House remains elusive, and the Republican-led Senate may not act before the election. Both sides accuse each other of, quote, moving the goalposts on the legislation. President Trump's chief of staff, Mark Meadows, says the U.S. is not going to control the pandemic. Meadows told CNN the government's response will be focused on vaccines and treatment, not containment. Meanwhile, Vice President Mike Pence's chief of staff and 2 other staff members have tested positive. Pence's latest test came back negative. In the Senate, a final vote is set for today on Amy Coney Barrett's nomination to the Supreme Court. Confirmation is all but assured. Senate Democratic leader Chuck Schumer accused Republicans of using raw political power to get Barrett confirmed before Election Day. And the British government is indicating it's optimistic about a trade deal with the European Union. The latest round of talks between the UK and the EU has been extended into the middle of this week. Earlier this month, Britain temporarily walked away from negotiations for a free trade agreement. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities. Let's get right to it. Bid away. There's no other way to put it. Risk-off feeling. Those are S&P futures, negative 32. Dow futures, negative 265. Let me give you those levels. 3420 mid-range in the range-bound September and October for SPX. Dow 27,927 as well. NASDAQ 100, of course, with a hit. Francine's watching the DAX. I'll let her chat up SAP. In Europe, yields come in 4 basis points. 0.80, make it 0.81%, 0.81% on the 10-year yield. Dollar strength, it's all correlated up. I would note, Francine, Turkish lira off of an incredibly difficult weekend for Mr. Erdogan, and particularly with Mr. Macron of France, blows through 8 to an 8.05. I haven't done the chart work there, but that is log convexity to a fare thee well. Francine?
Yeah, we need to spend a lot more time looking at Erdogan and, of course, his spat with the French. I'm looking at European stocks down, U.S. futures also dropping. Now, there are 2 things, Tom. First of all, coronavirus infections continue to climb. It's difficult to see how governments in Europe are, handling this and whether we'll have to go into another lockdown. Investors also doubting that D.C. lawmakers will reach an economic stimulus package anytime soon. And then look at this. German software maker SAP plunging more than 20% after cutting its revenue forecast, also saying that the pandemic will continue to hurt business, and that's filtering through to a lot of the DAX and also some of the other European stocks. Now, let's get straight to the IFO Institute. Business confidence in Germany fell in October. It's pretty much in line with estimates. If you look at that business confidence, it came in at 92.7 instead of the estimated 93. Well, joining us now is Clemens Fust. He's the IFO Institute president. Mr. Fust, always great to speak to you. So thank you so much for coming on. When you look at the number of infections, when you look at the number of restrictions that governments are imposing in Europe, what are the chances that we now get a double-dip recession?
Well, the risk is certainly rising. What we see is a very heterogeneous impact. I think we see a continued recovery in manufacturing. The question is, will this go on now with these rising infection numbers? But certainly a strong blow to services. So for Germany, we don't see a double dip yet, but the risk is certainly rising, no doubt.
What makes you worry about the coming weeks and months? I know we're 8 days away until the U.S. election. How does that change the fortune of German car makers and European exporters?
I think the U.S. elections are, of course, tremendously important, but the impact in the short term is limited. Of course, the medium-term outlook for car makers does depend on whether Trump is reelected or not, but the Democrats are not so much less protectionist. So this risk remains. I think what's worrying at the moment is really the rise in infections. It is unclear what could stop that, and that will have an impact on the recovery.
Clement, it's a completely unfair question, but you're such a trooper, I'm going to ask it anyways. I don't want you to play sell-side equity analyst, but the surprise of the SAP pandemic view, is there more of that to come in November?
I think it's clear that we are going to see downward revisions in many businesses. The question is how strong they are. I don't know. I'm no expert on the IT industry, but the key question is really, can the IT industry insulate itself from this shaky situation? I have to say, I doubt it. But as you say, it's very hard to make predictions here.
It's very hard to make predictions, but then across all of the landscape of Germany, forget about IT, look at the industry, look at small business as well. We have the same issue in America. Are we just grossly misjudging the revenue expectation across our nations?
I'm not sure. So there will be a strong impact of the current situation on everything that's called social consumption. But for Germany, for instance, we are talking about 6% maybe of GDP. So if that declines, the impact is limited. We've also seen that reestablishing the border crossing value chains has worked quite well in manufacturing. So I think we shouldn't be overly pessimistic, but it's clear. I mean, these partial shutdowns we're seeing at the moment don't help. Still, my hope would be that a lot of businesses have prepared and are now ready to deal with the situation and to operate under more difficult conditions.
But Mr. Fuest, what are companies telling you would be the correct way of dealing with the virus? So the number of cases are going up. Is it partial lockdown? Is it no lockdown? Or is it full lockdown because you get out of it quicker?
I'm afraid there is no consistent answer here. My view is that we need stronger lockdown measures, but differentiated ones, and measures that enable us to do things rather than preventing us from doing. So more testing, masks are very important, face masks, and we need to keep the economy going under these conditions.
But Mr. Fuest, when you speak to manufacturing companies, do they have a different view to services companies? Where's the divide on what companies need and are asking of the government?
I think the manufacturing companies would be worried if there was another closing of borders. If they would have to stop operating. For services is different. I think many services companies are aware that some of their operations, everything related to services with high contact risk, will be affected.
What did you see on trade front? What did you see from Germany on the mood of the export juggernaut?
I mean, that's been driving the recovery. Exports, for instance, from Germany to China are above last year's level. So that's been very positive. And generally, border crossing, value chains, trade has recovered quite well. That's also because manufacturing has recovered in all countries. So that's rather positive.
Thank you so much. Clement Fuest joins us from the IFO Institute. Thrilled that he could join us today. This is an important headline and, of course, speaks to the times. You've got to believe there'll be other headlines afterwards. UBS of Switzerland set to boost fixed pay and cut bonuses in compensation revamp. I immediately went, Francine, to a number of stories vintage 2011. I recall very clearly Andrew Ross Sorkin writing this up in 2011, a lot of Bloomberg as well. Francine, this has been tried before. There's no other way to put it.
It's tried before, Tom, and now we need to understand why they're doing this, and I need to dig a little bit deeper. But remember, it could also have something to do with some of the bankers that have left and weren't able to claw back their bonuses. So because of deferred pay, I think it's a different story to what we saw in 2008 and 2009. So something that we need to keep an eye on. But again, the rules have changed on how you pay out bonuses, Tom. So I don't know whether we can bring it back to 10 years ago and say it was a failure then and it's a failure now.
Should we do a data check?
Well, actually, there's only one story in town.
There's only one story in town, folks. You know, technology earnings, no. You know, the election, no. You know, pandemic, state of the Queen's health. I mean, Francine, please.
I mean, how cute is she? She's Edna Miller, and she's the firstborn of our Matthew Miller, who's off this week to be a father.
See,
Matt Miller, anchor and father, Tom. I feel like, certainly our congratulations go to him and his lovely wife.
This is great. 7 pounds 6 ounces, and of course named after the richest grandmother. Brilliant. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
We don't even have the bill yet because Nancy Pelosi, and she's coming up, I know she can speak to this, but we've continued to make offer after offer after offer, and Nancy continues to move the goalpost.
We're waiting for the final.
Well, so they said they would, and you're waiting to see it on paper.
They haven't yet. And also, same thing, they keep moving the goalpost. We wanted the sooner the better, and that's why we're making concessions. We're making concessions, too.
Mr. Tapper over on CNN with Speaker Pelosi. Buried in the headlines this weekend below the fold, Speaker Pelosi's made clear she will attempt another 2 years as Speaker of the House, assuming a Democratic majority. I believe she's 80 years old and spirited, as many of them are older than that. Joining us now, not 80 years old, but feeling 80 years of political anxiety that we've all gone through the last number of weeks. Rupert Harrison is with us, BlackRock Multi-Asset Strategies Portfolio Manager. We could spend the entire time on multi-asset portfolios, but really his political expertise, his public service to the United Kingdom is noted in this political season. Rupert, your observation of a U.S. election 8 days away, it certainly looks distinctive from 2008, from 2012, and certainly distinctive from 2016. What is the character of this election that you see?
Well, look, in terms of the likely result, we don't feel like we have an edge, but you've got to look at the polling. The polling is very, very different from 2016, and the very high probabilities attached to a Biden presidency look realistic. I think the difficult thing for investors is that it's not really just about the presidency. Almost more important is what happens to the Senate. If you're trying to look ahead for the kind of macro impulse coming out of the U.S. economy, the impact on the global economy, the difference between a Biden presidency with a Democrat Senate and a Biden presidency with a Republican Senate is absolutely at the extremes, particularly when it comes to fiscal policy. And that is absolutely the key margin for us. So if you get a blue sweep, I think that the fiscal impulse in the U.S. could be the trigger for quite a big reflationary wave around the world. You could see assets like emerging market equities that have lagged really starting to see those flows based on those expectations. If it's a Republican Senate, you've got to assume there's going to be some pretty obstructivist fiscal policy coming out of the Senate, and that's a very, very different world.
I can't imagine the number of meetings you've been in with Mr. Osborne and the others over the special relationship. How will the special relationship change?
I don't think it will change that much. I think you always get a lot of personality-based speculation about, does Boris Johnson hope secretly that Donald Trump will win? Is he going to have a difficult relationship with Joe Biden? I think this speculation in advance almost always turns out to be wrong. People said, oh, well, will David Cameron find it difficult to get along with Barack Obama after he had a strong relationship with Gordon Brown during the financial crisis? And actually, they got along extremely well. I think most of the time, a UK Prime Minister and a US President will find a way to work it out. I think the mutual interests are strong enough. So I would aim off for any predictions of a difficult relationship over the next few years.
But Rupert, the UK press, or certain people in the UK press, keep on saying that basically, number 10 is buying time with the EU, because if it's a Biden presidency, then they'll give more concessions in the EU, because it's highly likely that they'll get a better deal between the US and the UK moving forward. Do you think there's any truth in that?
I don't think so. I don't think the timing works. I think that this EU Brexit deal is going to get done in the next few weeks. And I don't think there's going to be enough smoke signals from a new president or from the re-elected President Trump to guide those negotiations. And the reality is, I think everybody in Whitehall knows, who are anywhere close to this, is that a US-UK trade deal is going to be determined largely by what Congress is going to sign up to. And that is really not going to be hugely affected by who's the president. So, I don't think that's the driving force. I think that what's determining the nature of this end game in the Brexit negotiations is all about the theatre. It's all about how you present this final deal as a great deal for the UK. I think the shape of that deal is now pretty much determined.
Rupert, what does this all mean for equities, but in general, actually, asset classes? What do you buy right now?
Yeah, so we are still broadly constructive on risk assets, particularly equities. One of the things we've been doing in portfolios over the last few months has been bringing down that bias towards growth and quality that has served a lot of investors well over the last few years, and trying to flatten up by buying cyclicals, value, even buying European banks, which have been a pretty unloved asset class. Now, that hasn't necessarily worked, particularly on the European side the last few weeks, but we still feel like there are significant upsides here. First of all, the global macro momentum and that sort of reflationary momentum is intact. We don't think the virus is going to knock that off course this winter. And then there's also, you've got a position for some potential upside. We are going to get very, very important news in terms of the efficacy signals of these vaccines from phase 3 trials coming through in the next few weeks. And those are potentially game-changing. And I don't think you want to be caught on the wrong side of that.
So then how do you position in terms of the actual asset allocation you and others are doing, Russ Kostrich and others at BlackRock? What are you actually doing in the equity bond mix, and particularly the sector mix?
Yeah, right. I mean, I can speak to the portfolios that I manage. I think that on the equity bond mix, it's a different world. The correlation has been much lower. The volatility on bonds, government bonds, has been so much lower that I don't think you can expect government bonds to provide you the same kind of cushion in a multi-asset portfolio as they used to. So you've got to think, I think, a little bit more inventively about diversification. At the same time, we're quite happy holding treasuries and government bonds because the downside risk seems pretty low. I don't think we're going to see a big spike in yields because I think the Fed and other central banks are not happy to see, particularly on the real yield side, a big spike in yields. When it comes to within equities, as I say, I think we are looking to buy to sort of flatten up what for many investors, including us, has been an underweight to value and to a certain extent underweight to cyclicality for some time. I think that we've been buying for some time over the last few months home builders, industrials, European banks.
Right.
That's where it seems to us that the value trade could be. Now, of course, there is this big binary event coming up, the US election, and historically the evidence is that for those big risk events, there's a premium to holding assets through that event. You don't really want to de-risk ahead of these big risk events because historically that's when you get a lot of returns.
Rupert Harrison with us with BlackRock. He will continue with us. Much to talk about. We'll take a more UK tilt. Francine's threatening to talk about Brexit and fisheries off the coast of the North Sea. Rupert Harrison, expert on the fishing law of the Channel and the North Seas and the Irish Sea as well. In our next hour, really a look at this economy and the linkage into the markets. Carl Weinberg joins High-Frequency Economics. A difficult day, risk-off, futures at -30. This is Bloomberg.
What would you say that the CDC or the FDA or the White House or HHS should have done differently?
Almost all of us have underestimated the dramatic impact of this outbreak.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg Surveillance, I'm Rishka Gupta with your Bloomberg Business Flash. China will impose unspecified sanctions on American defense contractors Lockheed Martin, Boeing, and Raytheon. That's after the U.S. approved a $1.8 billion arms sale to Taiwan last week. China's foreign ministry says the sanctions are needed to, quote, uphold national interests. Carlyle Group is in talks to buy Siemens' mechanical drive business for about $2.4 billion. Bloomberg's learned that the sale of the German engineering firm's Flender unit could be announced this week. Flender makes gears and transmissions used in everything from cement production to beer making. And that's your latest Bloomberg Business Flash. Tom Francine.
Redika, thanks so much. Let's do a data check right now. 31, negative 31 on SPX with lots of correlation and 4 basis points on a 30-year bond, 3 basis points on the 10-year bond, putting that at 0.81%. Still a higher yield regime. The pullback is very much center tendency off a trading range of all of September and all of October as well. We leap into November here in a bit, and we do so flat. Dollar, a little bit of strength here. Yen, 104.87 gets my attention. And as I mentioned earlier, a very difficult day for a weaker Turkish lira. Francine?
Yeah, on to November and on to November 3rd, Tom. And, ahead of that, there's only one game in town, and that's the election. How it will change it. We look at the polls and, of course, the impact on the sectors. European stocks are dropping. A number of infections because of coronavirus continue to climb. And, of course, there's a number of new restrictions that came over the weekend. And then SAP, the German software maker, plunging 20%. We also have a great story on UBS set to boost fixed pay and cut bonuses in this compensation revamp. Coming up in the next hour, we speak about green initiatives with Paul Polman, former Unilever chief executive. This is Bloomberg.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
I'm I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
It's difficult to see how Europe can gain grounds from where it is today without, a significant shake-up of its, system, and the U.S. is still not to be underestimated because it's always been able to come out somehow stronger from any changes in administrations or politics.
Good morning, everyone. Francine Lacroix and Tom Keene there. The gentleman exiting at UBS, Mr. Armati, a really interesting Monday. Yes, it's an 8 days a week Monday into Tuesday. There will be a special talking about Mr. Armati and, of course, his tenure at UBS. Look for that this weekend. Also with that, a headline. Guess you see that given the challenges out there. They had a great chart up in Francine's earlier hour of the decline in the bank index in Europe. 39%, I believe, is the statistic year to date. And with UBS, you see it shift to fixed pay off of bonuses, or at least that's the hope and prayer of management. Usually that doesn't work out so well. Francine, futures, negative 31.
Yeah, and that's partly to do with the number of cases, of course, increasing around the world in terms of COVID, and it's partly to do with the fact that markets are just not expecting a stimulus package out of the U.S. Let's get back to Rupert Harrison of BlackRock, who's still with us. We touched on Brexit, and we talked a bit about the U.S. election. But Rupert, when it comes to Brexit, first of all, I'm looking at the latest report saying that COVID has dragged 2 million more UK adults into financial troubles. The government is dealing with Brexit, and it's dealing with COVID. I mean, what would be the elegant way to deal with Brexit to make sure that, then COVID doesn't put too many people in distress?
No, I think the overwhelming incentives for both sides in these Brexit negotiations is still to get a deal. And I think that is what we're going to see in the next few weeks. So, as you say, COVID provides a backdrop that there was some speculation earlier in the year that said, well, the impact on the economy from COVID is so bad that therefore the additional impact from a disruptive no deal on these trade negotiations would be hidden in the mix, and therefore they can get away with it. I don't think that's how they're thinking. I think that they don't want to have that distraction. And also, when you look at the details of how close the two sides are now, I mean, the remaining issues around fisheries, around the details on state aid and enforcement, these are relatively small differences. There is so much that has been agreed. All of the incentives on both sides, I think, are now heading towards a deal.
What does it mean for how the government then steers this economy afterwards? Are we going to see tax hikes, tax cuts? I mean, they basically need to rebrand the UK.
Yeah, so there's a huge attempt going on at that. So we've just seen a trade deal signed with Japan, mostly replacing what was in place from the EU, but with some tweaks. I think there will be a huge amount of focus on technology and investment in technology and infrastructure in the UK. I think the government in the UK is going to remain very committed to this levelling up agenda, which is a very politically salient agenda in the UK about trying to bring up regions of the country that have been left behind. But the most important thing in terms of the short term is that the Chancellor, Rishi Sunak, is continuing to keep the taps open. And I think we saw that, just last week, he had to come back and tweak his part-time work support scheme in the face of worsening virus problems, in the face of increased restrictions in parts of the economy. We still have a very, very generous, as a result, a very generous fiscal situation in the UK supporting incomes. And actually right across Europe, that is the crucial issue, that even if we get weakening in parts of the service sector over this winter period, the fact that governments are supporting the incomes of people in those sectors and supporting businesses in those sectors should limit the knock-on impact on the broader macroeconomy. And that is really the most important thing.
Rupert, to me it is so important that the great bargain here, down the road from Brexit, down the road from this horrific natural disaster as well, is the idea of a greater Great Britain, of a Great Britain capturing Pax Britannica, capturing the global reach that it used to have versus the fear of a little Britain. How is that bet going?
Yeah, I still think that the instincts of most British politicians and the institutions that run the British state are internationalist. I think that we are going to, and I certainly think those are the instincts of Boris Johnson. So I think that we are going to see a sort of continued emphasis on Britain in the world. I think we're going to see an assertive foreign policy as the UK works very hard to demonstrate that it's not taking a step back from the world. I think we're going to see a big focus on trade deals to the extent that those can be done. It's not a great global environment for trade deals, to be honest. And obviously, we wait to see what happens out of the US election. So I think that is going to be the focus. I think that there is a domestic political agenda around reassuring the public around immigration and migration that will continue to be a focus. But I think that they will work very hard to try and ensure that doesn't distract from a broader message that the UK is open for business.
As a foreigner, can the new Labour Party do that? Can the new Labour Party maintain a Labour heritage domestically and a global reach?
That's a very interesting question. I think that would certainly be the ambition of Keir Starmer. Look, I think the answer was totally different under Jeremy Corbyn, right? Jeremy Corbyn would have had a foreign policy that would have put the UK totally out of line with the entire Western world, particularly when it came to Russia, when it came to Israel, when it came to the US. I don't think that is true at all. I think Keir Starmer is fighting to pull the Labour Party back into something that looks like the centre ground. I think that sort of foreign policy risk has gone away. I think that the Labour Party now is just more of a traditional left-wing party. It wants more spending, it wants redistribution, higher taxes. I don't think you'd see a big change internationally, apart from a greater emphasis possibly on human rights as part of foreign policy.
Rupert, I'm looking at some of our top headlines, and there's so much news coming at from like very different sides. But China is always at the forefront of some of the big changes, be it debt concerns, debt relief, or actually with the new growth plans, it could become a bigger economy than the U.S. in the next decade. How do you play China?
Yeah, it's a very tricky one, and it's a very tricky one, particularly coming up with this U.S. election, because of course we've got a pretty binary outcome here when it comes to the presidency. And I think if we stick with the most likely outcome at this stage, which is a Biden win, I think you do get, in the short term at least, a big relaxation of some of those tensions. You're not going to see some of the tactics, at least, that we associate with the Trump presidency when it comes to U.S.-China relations, even if the underlying pressure within the U.S. political system coming out of Congress is for a pretty tough stance on things like human rights, technology, intellectual property, and so on. So I think in the short term, you could see quite a big relief rally from some of the assets that have been particularly affected by some of these short-term tensions. And that's something that we're certainly looking to position for. I think that more broadly, Chinese bonds continue to be something that is potentially an attractive ballast in portfolios, particularly when yields elsewhere are still so low. And we still see that the broad macro situation in China is relatively benign. Again, looking around the world for growth, there's certainly sources of growth in China.
And Rupert, finally, lira weakening past 8 per dollar. Is there any incentive for investors to go back into Turkey?
Well, not at this stage from the long side. I mean, I still see this as a bit of a slow motion car crash. The Turkish government continues to take an approach that I don't think is going to resolve this easily. I think we could end up with a pretty difficult situation for the Turkish government and potentially the involvement of the IMF down the line. As an investor, it is very expensive to try and play this from the short side, and so it's a very, very difficult market to play. But at the same time, it doesn't feel like this is going to end well.
Rupert, thank you so much. Rupert Harrison, their BlackRock Multi-Asset Strategies Portfolio Manager. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. House Speaker Nancy Pelosi and the White House accuse each other of doing the same thing when it comes to a pandemic relief plan. That is, quote, moving the goalpost when it comes to what's in the actual legislation. Pelosi says the House could pass a bill this week. Still, an agreement with the White House isn't certain, and the Republican-led Senate may not act before the election. Coronavirus cases are surging again in the two countries at the center of the initial wave of the pandemic in Europe. Italy is introducing its strongest restrictions since the end of a national lockdown in May. Meanwhile, Spain also will impose new measures, including a curfew.
Por tanto, aprobamos de nuevo el estado de alarma.
We declare, once again, a state of emergency because it is the most effective way to slow down the contagion curve and keep the virus away.
Germany will consider its next steps at a meeting today. Joe Biden calls Republican questions about his son Hunter's business deals a smear campaign. The Democratic presidential candidate also told CBS News that the release of documents allegedly belonging to his son may have been part of a Russian disinformation campaign. Biden's claim has not been substantiated. And more deliberate blackouts in Northern California. The state's largest utility, PG&E, cut power to 1.1 million people to prevent live wires from falling into dry brush and starting wildfires. Winds as high as 50 miles an hour swept through an area north of San Francisco. The blackouts may last until tomorrow. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. A lot on American politics coming up as well. Martin Schenker will join us. A lot of other good guests to begin that 8 days to the election as well. On a pandemic and a really, really challenging weekend for news there. Ireland in lockdown. Andrea Ammon will join us from the European Center of Disease and Control, the director. The timely conversation, to say the least. Stay with us with futures at -32, Dow futures -256. This is Bloomberg.
Particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keene in New York. Tom, we know the virus is continuing to ravage the West. Spain has declared a state of emergency and launched a national curfew, while Italy has implemented the tightest curbs since May. Now, global infections are over 43 million. Joining us now is Andrea Ammon, European Center for Disease Prevention and Control Director. Thank you so much for joining us today. There are many questions that people have. The first one, is this a second wave? Is it the continuation of the first wave, but is it less deadly than what we saw back in March and April?
Okay, I think there are different philosophies how to call it, but in any case, it's an upsurge of cases. Whether it's second wave, first wave, third wave, it doesn't matter. What we are seeing is that due to the expansion of testing, the majority of new cases is among adults or people younger than 50 who have less risk of severe disease. So the reason why the hospitalization rates and intensive care unit rates are still not as high as they were in spring is due to the fact that it's now a different population that gets actually tested and is diagnosed positive. However, we see in several countries now that the rate in elderly is rising, that the hospitalization admissions are rising, and also that the mortality is increasing. So it is a serious increase in transmission in the countries.
Andrew Ammon, do we have any sense of how much of the population has already had the virus and can't catch it again? And does that dictate how we should be dealing with these restrictions and lockdowns in Europe?
I mean, from a lot of questions around the immunity are still not answered. But from what we know from the studies that have been done, the assumption is that overall it's about 15% of the European population that has been exposed to the virus.
Dr. Ammon, Tom Keene in New York, good morning to you. We just assume the Germans get it right. There's something about German engineering, whether it's automobiles or medicine, and you know it's a lot of hard work and organization. What is your single message to continental Europe and to a United States embarrassed on how to get organized to get this contained?
A very difficult question, because I don't know exactly how the colleagues in the US are approaching this. I only can say that in the EU that countries have followed after the loosening or easing of measures in May, June, have followed the expansion of testing and contact tracing. However, apparently some of the easing of the measures was a bit too enthusiastic. So we're dealing now with an increase in cases.
Well, part of your original research was on the chronic condition of the liver. Tell me about the chronic condition of people who are younger and the belief of many in America that they are discrete and separate from old people with this virus. If there's a lot of young people getting sick, what does that mean for the older people that are still alive?
Well, in general, the people below 50 have a lower risk of having a severe disease, getting admitted to hospital or die. That doesn't mean that they cannot get severe disease, go to hospital or die. So I think we have to be very, very careful here to say that someone who is below 50 and gets sick is automatically safe. We have also among younger adults cases who have no underlying disease and who died.
Thank you so much for, of course, the grim update. Andrew Ammon, their European Center for Disease Prevention and Control Director. Now, coming up in the next hour, Tom, we continue tracking COVID-19 with Joshua Sharfstein. He's Johns Hopkins Bloomberg School of Public Health Vice Dean. That's at 6:30 a.m. in New York, 10:30 a.m. in London, as we still try and figure out exactly when the vaccination would come, and we try and figure out really to what extent this, will affect some of the younger population as well. This is Bloomberg.
really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg surveillance, Francine Lacroix in London. I'm Tom Keene in New York. Of course, the distractions of an American election. We digress for a moment, as we should much more in normal times, to the collapse of Turkey, with Turkish lira at 8.03, the litmus paper of a system under stress. Onur Ant drives forward our Istanbul coverage. We're thrilled he could join us briefly here this morning. Onur, what I see so much is Mr. Erdogan playing to the domestic politics, including his meeting with the Armenian Patriarch a few days ago. Explain to our international audience the domestic pressure Mr. Erdogan is under to play to his core audience, his core constituency.
I think the pressures that he's under is very much similar to the kind of pressures facing politicians around the world. He is facing the impact of coronavirus on the economy, which was already not doing great, to say the least, before March. And his effort to jumpstart the economy has somewhat resulted in a backlash in terms of investors, also Turkish residents selling off the lira, which, as I said, is now trading at record lows against the dollar. So he's at a tough place. He wants to revive the economy. Of course, that's important for his core electorate. Also, people that vote against him. But at the same time, he needs to treat a careful line, because the lira is not behaving well, and it has implications for the entire 83 million population in terms of living expenses and people's ability to repay debt, especially affects that of companies.
Onur, when you look at what the central bank can do, what are their options right now?
The central bank was very much expected to continue what appeared to be its return to orthodoxy last week, but it seems to have disappointed markets deeply when it went for another sort of backdoor channel whereby it can continue to tighten its policy without really resorting to an outright hike to its benchmark policy rate. So we know that it's keeping a close eye on the lira, and it's very much uncomfortable with the current levels. But whether or not it's ready to do what it did in September in terms of tightening, it remains to be seen. We're going to see that in about 4 weeks.
Onur, a very unfair question, but I'll take a stab at it. Do we have an understanding of the degrees of freedom Mr. Erdogan and his central bank have? Do we understand what's in the piggy bank in crisis, or their ability to reach out to, say, the International Monetary Fund?
Well, we've heard many times from both Erdogan and his allies that Turkey doesn't feel the need to go for the IMF. And to be fair, they've lasted a lot longer without an IMF help than what people thought they could do without an IMF help. Mm-hmm. But in terms of the freedom of choice of what the central bank has to do, it's a tough question. We know a lot of people question the central bank's ability to act, but it did at one of the most unexpected times. Yet it didn't act just last week when everybody was expecting it to act. So really difficult. We know that there's a credibility gap, which is cited by the IMF and others. When it comes to central bank, it remains a very unpredictable bank in terms of what it's going to do next.
Unreal. Onur Ant, thank you so much. Greatly appreciated. Istanbul Bureau Chief. We could go on forever here, but we won't. Turkish lira, I just did a big fancy study, Francine, of lira depreciation back 7 years, and it is shockingly on trend of just a persistent depreciation from under 2 lira per dollar to 8 lira per dollar.
Yeah, Tom, what's interesting is really if you put if you juxtapose what's happening with the economy, what's happening with the currency, and the fact that it does seem that the President Erdogan is just becoming much more belligerent, picking a fight with France, also going after Greece. It's something that could really be at the crossroads between foreign policy and things getting ugly between Europe and Turkey, and then the impact as a way of looking like the strong man back home, Tom.
And again, Turkey, a NATO member. We make note of that. Futures have deteriorated traded over the hour. Negative 30 has become negative 34 on SPX futures. The VIX right out to 30 right now, 29.95. So let's call that a 30 level on VIX. Over 2 big figure move there. Risk off, bid slip away. In the bond market, yields come in 0.81%. In our next hour, 8 days to the election, Carl Weinberg of High Frequency Economics. Good morning.
This doesn't hold true for men. We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it. This morning, forget second and third wave punditry, simply the opening of societies. It has not worked. Ireland in lockdown, a grim weekend for continental Europe. El Paso intensive care units, they are at full capacity. Indiana had 12 deaths on Sunday. Their vice president has 5 aides and advisors infected. On the pandemic, we are, quote, rounding the turn. Markets, well, they give way. Risk off. Big tech earnings later this week, Apple and Amazon. And there are 8 days a week in this election week. Both Trump and Biden, Biden and Trump. No, it's not enough to show I care. It's an election week, and it starts on Monday. Good morning, everyone. Bloomberg Surveillance, Tom Keene in New York, Francine Lacroix in Apple, in London, I should say, not too far from Apple Studios on Abbey Road as well. You know, Francine, it really is 8 days a week. We were talking about it on the break, and there's just a great tradition of this being the final week where they really recalibrate. And let us remember, Francine, 4 years ago, this is when President Trump, with a vengeance, recalibrated.
Yeah, so we look at the polls, we look at Georgia, Tom. I know I've been obsessed with Georgia for quite some time. There's some of these swing states, actually, you know, that have been for a pretty long time, red could turn blue, so we look at the polls there. And it must be election week if you're singing to me, Tom. So I know there's, you know, that's what the markets are looking at. That's what even they say Boris Johnson is looking at, to see whether he signs or not with the EU, who becomes president of the U.S. So really, it's going to be a busy 8 days to November 3rd.
Well, voties and long lines across the nation, lots of stories and anecdotes on that. Let us get now on this Monday to our first word news in New York City. Here's Ritika Gupta.
Morning, Tom. Francine. House Speaker Nancy Pelosi says the chamber could pass a pandemic relief package this week. Still, a deal with the White House remains elusive, and the Republican-led Senate may not act before the election. Both sides accuse each other of, quote, moving the goalposts on legislation. President Trump's chief of staff, Mark Meadows, says the U.S. is not going to control the pandemic. Meadows told CNN the government's response will be focused on vaccines and treatment, not containment. Meanwhile, Vice President Mike Pence's chief of staff and 2 other staff members have tested positive. Pence's latest test came back negative. And in the Senate, a final vote is set for today on Amy Coney Barrett's nomination to the Supreme Court. Confirmation is all but assured. Senate Democratic leader Chuck Schumer accused Republicans of using war political power to get Barrett confirmed before Election Day. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Francine.
Data check. Yields are lower in the United States, a worser result, if you will, here. -3 basis points lower yield in the 10-year, 0.81%. Futures -35, Dow futures -2. There it is, a 30 print on the VIX. That's a real benchmark. 3.0 on the VIX, 2.45. I'm going to leave it there. We got to get to Mr. Schenker. Francine?
Yeah, I'll be quick. Investors are seeking protection in haven assets. I'm looking at treasuries rising. If you look at, you know, yields on the 10-year, they're lower. Dollar strengthening. Gold, little change. But then the German software maker SAP plunged 20% after cutting its revenue forecast, and that's sending European stocks lower, Tom.
Very good. We begin our coverage on these 8 days of election with, well, a look at the voices and then to our Martin Schenker. First, the president and the former vice president.
Many of our greatest companies and labs are coming out very quickly with the vaccines. They're doing great, very shortly, very quickly. It's going to be delivered fast. That will quickly end the pandemic. It's ending anyway. We're rounding the turn, but the vaccine will get it down fast.
Folks, I have an admission to make. There's so many of you here. I wish I could go to car and meet you all. I don't like the idea of all this distance, but it's necessary. I appreciate you being safe. What we don't want to do is become super spreaders.
Oh, now they're doing it again. You know, the laptop from hell. They found the laptop from hell. This is a laptop that they don't want to see. How the hell this laptop got freed up. It's amazing the way God works. The laptop from hell.
They didn't tell us about the virus. The administration gave Wall Street investors, though, a heads up. He didn't tell us. He just told his Wall Street friends, and that's why they made so much money by, quote, selling short in the market. They knew what was coming. Well, what happened to the rest of us?
It is part of the American fabric. I would note in Dallas, Pennsylvania, up the valley from Scranton and Wilkes-Barre, John Bon Jovi out for Vice President Biden as they both begin the dash. Our Martin Schenker out in force, somewhere lost up the Hudson River Valley in the beautitude of the weekend voting. And Marty, it was in long, long lines. That's really nationwide, isn't it?
It is nationwide, Tom. I myself voted up in Hudson, New York on yesterday, and half an hour before the polls opened, the line was around the block.
It's around the block, and it's so much the allusion to 2008 or 12 or 16. Which election does this compare to, Marty, 8 days on?
Well, I mean, for the Democrats, they're hoping it's very much like 2008. And for the Republicans, they hope it's a repetition of 2016, where polling showed Hillary Clinton ahead, but Donald Trump pulled it out.
Marty, have the polls changed? I guess, you know, the one unknown is this shy Trump voter. Now, you speak to half the people, they say this is elusive. It just, you know, there are very few of them. And others say that actually this is a major factor, is that people have been shamed into saying that, you know, they vote for President Trump. What are the polls telling us?
It's amazing that the national polls have been pretty consistent for months, essentially, with Joe Biden ahead by high single digits. Some polls even had him above 10%. But it's in those battleground states and the new states that are now contentious that should give everybody pause before predicting who's going to win this race, because those are very close and within the margin of error, and anything could happen on Election Day.
I mean, do we have new swing states? And we've been trying to figure it out on surveillance for quite some time. There are these states that, you know, that haven't voted Democrats for quite some time that are now, you know, could be on the cusp.
That's right. I mean, you mentioned Georgia, Francine, and there's Texas as well, and Arizona. I mean, these are all now essentially battleground states. And again, they are so close. And you add in the other states like Florida, which is also very close. Yeah. And it gives you pause before making predictions on what's going to happen.
Mr. Schenker, do TV commercials work anymore?
I think they work as entertainment. But, you know, so many people have decided already and even voted already. Over 60 million people have already voted. So for them, the commercials are just entertainment.
It's just entertainment, and yet we're going to dash in the, you know, the amount of money that everybody agrees is sort of unseemly as well. I need something to focus on, Marty. What state are you focused on the most?
I think that actually Georgia.
Stop. Come on. Folks, this is just brilliant. Francine Lacroix across the pond is focused on Georgia as well. Marty, that's clairvoyant. What's about Georgia?
Well, Georgia, obviously, Stacey Abrams made a valiant bid for governor 2 years ago. She came up a couple of percentage points behind. The state is changing demographically. And it's also very interesting because both Senate seats are up in Georgia, and you must get 50% to become senator. And if neither candidate does, then we're not going to know where the Senate is until January.
Marty, you see, this is why, Francine, it's great to have Marty Schenker on. I did not know that. He's a font of wisdom.
Of course he is. We know that. That's why we have him on. Marty, when you look at, you know, the infection of the people around Mike Pence, and I think it's a chief of staff and for other top aides, what does it mean for what the vice president needs to do, and how does that impact, you know, the nomination of the Supreme Court judge?
Well, I mean, the Donald Trump holding rally after rally and Mike Pence traveling after his close aides tested positive allows the Democrats to continue the narrative that the Republicans had a very poor response to this virus, and even to this day are not trying to contain it. And I think that just feeds into the Democratic argument.
Marty Schenker, stay healthy. He is our chief content officer here on the path to the election, 8 days away. I'm sure we'll be speaking to him many more times through to it. Really gets a great compendium of all the zeitgeist that is out there. Coming up on the economy, it is good to catch up with Carl Weinberg, high-frequency economic chief economist. He's written some blistering notes on aggregate demand, and it's not there. Futures simply deteriorate, negative 30 down to negative 35, and the VIX now out to 3030. Stay with us from London, from New York. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
We don't even have the bill yet because Nancy Pelosi, and she's coming up, I know she can speak to this, but we've continued to make offer after offer after offer, and Nancy continues to move the goalposts.
We're waiting for the final.
Well, so they said they would, and you're waiting to see it on paper.
They haven't yet. And also, same thing, they keep moving the goalpost. We want it the sooner the better, and that's why we're making concessions. We're making concessions, too.
The political moment there with Mr. Meadows and the Speaker from the House beneath the fold this weekend. Maybe you missed it. Nancy Pelosi saying she will effort again as Speaker of the House for another 2 years. Joining us right now, always efforting, is Carl Weinberg, High Frequency Economics Chief Economist. I love, Carl, the acuity of your global essay this weekend where you focus on Q4. Where is our economy October 1 on? What level do you have?
Well, we don't have a level, and the reason that we don't have a level is that we don't really know what the pandemic is going to do, what's going to happen with coronavirus. What we do know is that the third quarter got a boost because in every country around the world, GDP growth, we're looking at figures like 52% growth for Germany, 29% for Germany, 57% for the Eurozone, 63% for France. But it's an illusion because the base was so low, and that's a windfall for third quarter growth. The fourth quarter won't have that windfall, and we could see flat or worse depending on how the months work out. The indication this morning from Germany is that it's already starting to fizzle a little bit over there with the business climate index down. It's reason to be worried about Q4.
With the political moment that we're in, usually ex-pandemic, we're worried about what's the run rate of GDP. Is it under 2%? Can you be that grim, or is it actually more constructive?
Well, in the United States, we think that there's a rebound in progress, and barring a resurgence of the virus, we would have said something around 2 or 3% is possible, which might have gotten us back to where we were before the lockdowns, maybe over the course of 3 or 4 or 5 years. But with this new third wave in the United States, second wave in Europe out there, we really can't predict what's going to happen because the virus can just shut everything down. Not because of government lockdowns, but just because people can't or won't go to work. They have to stay home for childcare. Their factory is shut because somebody else got sick. There's a number of ways in which the infection infects the economy, and that's what we're worried about right now. Not a formal lockdown as much as an unwanted, undesired shutdown of economic activity as the coronavirus spreads again.
So, Carl, are we looking, and good morning from London, are we looking now at a double-dip recession? And will the markets care, or will they just focus on what central banks and fiscal policy can do?
Well, the chart may call it a double dip, but it's all the same recession. It's all the same thing. The shock is that people can't get to work because they're sick or they're locked down or both. It's a supply shock compounded by a demand shock when they come down. Just because the quarterly numbers go up and down on the basis of maths, when we look at charts of the level of things, it's pretty clear what's happening. And we have a lot of them in our weekly notes on the global economy today. We look at the levels, and the direction of the levels is down. Now with a little bit of a bounce, and now on all the monthly charts, we're starting to see a little tail downward on indicators that we trust, like the Eiffel Index out this morning, other survey data from other countries. So we're concerned that we're seeing kind of a dead cat bounce, if you will, off the bottom, and that with the new rise in infections, that things can only get worse from here.
So get worse, what does it mean for where you put your money? Do you buy gold? Do you buy havens?
Yeah, so first of all, by get worse, I mean that I think that April was the incompressible low point of the economy. And I think that we're headed back to those levels again on the back of this new wave. So where do you put your money? That's a good question, because you're starting to run out of opportunities. We're going to see, I think, this week, as GDP numbers start to come out for a number of countries, a burst of optimism in the stock market that's going to take it to new highs, going to bolster investor confidence. Everybody's going to say, boy, 20, 30% GDP growth, that's terrific. We got to buy stocks. But then as the fourth quarter emerges and as things start to go into crash mode again, then I think we're going to see a sharp reversal. You know, I think we don't give investment advice at High Frequency Economics, but I think the equity market is in for a very wild ride from here. I think that bond yields really are going to stay about where they are, if anything, go even a little bit lower, a little bit more negative in Europe on the basis of more negative economic information coming out there.
Carl, one of the heritages of a Carl Weinberg essay, month after month after month, is a careful study of export and import dynamics. Can you give any kind of vector up for world trade, a vector up for U.S. exports, even a vector up for better imports?
Well, you know, looking at world trade, which is more my kettle of fish than the U.S. economy, you know, world trade is being held down by commodities, by things like energy products, raw materials, and so forth. With our industrial structure, anywhere from 5 to 20% lower in terms of operation levels than where it was back in February, right? We're seeing less trade in the stuff that goes into the industrial machine, and that's dragging down world trade, particularly affecting the emerging markets and the commodity-producing countries that are largely the customers of the things that we export from the United States. So this whole process is kind of a snowballing process that starts with the economic activity slowing in the advanced countries, then reflects out to the emerging world, and then reflects back into the United States through lower export sales. So right now we're in a grim state. You know, if we started to see levels of industrial production going back to where we were before, we'd see this increase in imports of commodities, and that would be good. But that's the key thing. Don't look at the growth rates, Tom. Tell everyone to look at the levels. Right. It's the level of activity that determines the level of employment, the level of capacity utilization, and the level of commodity input.
Where is the level of our labor economy?
Very severely depressed right now. You know, you can be optimistic about a V-shaped recovery. You can talk from today until tomorrow about how growth is bouncing back, but growth isn't the object. It's not the metric by which recovery will be measured. The metric is level, and we have, 20 million people in the United States still getting some kind of unemployment benefit in one way or another, and that's X number of million more than we saw before. And we see this story repeated all around the world, except in Japan, where they don't fire anybody, and therefore we're going to see the lifetime employment system generate very, very low profits for companies in Japan, as well as reductions in average and overtime. But we're looking at a very, very soft labor market everywhere in the world right now.
Carl Weinberg, thank you so much. And folks, I can't say enough about the combined output of High Frequency Economics. We protect the copyright of all our guests. Please get that through their team at High Frequency Economics. Just extraordinary China note, a U.S. note, and of course, Dr. Weinberg's global note is must read on Wall Street. Speaking about must read, this is important. If you have a bull case, and particularly a bull case into this tech earnings week, Benjamin Laidler is someone to speak to. With Tower Hudson, he has been shockingly good on staying invested in times of fear. Ben Laidler in the 7 o'clock hour. This is Bloomberg. Good morning.
Jacinda Ardern's Labour Party holding 64 seats in the 120-seat parliament. Now, that is interesting because it's the first time since the introduction of proportional representation in 1996 that any party has won enough seats to govern on its own. Now, this is by turns rather luxurious and also slightly terrifying for the new Labour government because there are no checks and balances on power. There is no upper house. Jacinda Ardern can pretty much rule as she sees fit. So she did rule out, heading into this election, any capital gains tax, but as revenue collapses, it must be very tempting to give that policy another look. She's also contemplating going into coalition with the Greens Party, even though she doesn't actually need them to govern. Now, the Greens Party did take forward a more comprehensive package of tax reforms to this election, so were she to govern in concert with the Greens, they could do much of the heavy lifting on tax reform, which may also prove to be a little unpopular with some portions of the electorate. So it's going to be very interesting to watch this new term. There's going to be a lot of new and untested MPs in the caucus. So a second Jacinda Ardern term is going to be full of all sorts of different challenges to the ones that characterized the first.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. China will impose unspecified sanctions on Boeing's defense unit, Lockheed Martin and Raytheon. That's after the U.S. approved a $1.8 billion arms sale to Taiwan last week. China's foreign ministry says the sanctions are needed to, quote, uphold national interests. The parent of coffee and donuts chain at Dunkin' is in talks to be acquired by private equity-backed Inspire Brands. According to the New York Times, the deal is valued at $8.8 billion and could be announced today. Shares of Dunkin' Brands have more than doubled since March. Inspire Brands owns Buffalo Wild Wings and Jimmy John's. And early on, the pandemic created shortages in everything from toilet paper to meat. Now consumers face a scarcity of larger household goods. Here's Scarlet Fu.
Shopping for a new freezer or bicycle? Join the waiting list. Buying things is easier than ever, but making and getting them to your doorstep, that's a complex choreography of global supply chains and reliable shipping. In the early days of COVID, few retailers anticipated any demand surge, while decades of just-in-time manufacturing kept inventories lean. Factories around the globe reopened from initial shutdowns, but often at limited capacity to keep workers socially distanced. The virus also gummed up trade lanes, resulting in a shortage of containers and congestion at ports. With demand climbing on the back of a booming U.S. housing market, an already stretched network is seeing even more stress. Repairing your aging appliances is just as hard, especially after the U.S. raised tariffs on Chinese-made parts. Economists say, get ready for the biggest restocking cycle on record, perhaps straining the system even more. As manufacturers rebuild inventory, GDP will get a boost over the next 2 to 3 quarters, but states that rely on logistics, manufacturing, and construction will outperform those with service-driven economies.
And that's the Bloomberg Business Flash. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Francine Lacroix here in London, Tom Keene in New York. Now, Tom, our next guest cut his teeth leading one of the world's largest consumer companies. The former Unilever chief executive, Paul Pullman, is now chairing a venture in green policy, Imagine and B-Team. He's also, received a commitment from Japan's prime minister to cut greenhouse gas emissions in the country to net zero by 2050. Now, we're delighted to be joined by Paul Pullman, a former Unilever chief executive. Paul, thank you so much for joining us. You were really one of the first people that cared about sustainability and started working on sustainability to build a better future at Unilever. We're now in 2020. We're 8 days to the U.S. election. We've seen a lot of commitment from private companies, but what do you need from the next U.S. administration to actually, bring this forward, this agenda at the forefront of what we need to care about?
Well, thanks, Francine, and thanks for the opportunity. And indeed, in the private sector, we now have about 1,300 companies with a combined market cap of about $25 trillion calling for climate action. So the private sector indeed is rallying broadly. In the US, the elections are going to be decisive to some extent, as well as towards the future of attacking this most existential threat that we have. On the one hand, we have a president that continues to call this a hoax and plays disregard to it. And on the other hand, we have someone that very much looks to Europe, the Green Deal, and the broad movement in the US, about 60–70% of the population demanding climate action to put something in place. So the outcome of the elections is going to be decisive, not as much in the US, if I may say, as to the role that the US will play globally to move this forward. With the announcement today from Japan being net zero by 2050, China having made a commitment 2060, major regions like the EU, as well as Britain, there is a clear momentum if we now also get the Americans on board.
But Paul, something's changed. So historically, it was governments that actually set guidelines or deadlines for companies, and companies did better on sustainability. If you look at the vacuum in the US, private companies have really taken the lead. Does that change if you have a Democratic president?
Well, we need everybody, and I don't think the issue can be solved by just relying on one party or the other. But it is very clear that the American industry right now is dealing with the costs and the inefficiencies of not acting, with a lot of political frameworks, government regulations that are not conducive. And we certainly could accelerate if there is a new government, and it would make the industry more competitive. One of the reasons that Prime Minister Suga in Japan now has announced his commitment to be net zero in 2050, i.e. stay below the 1.5 degrees warming, is that they firmly say now it will accelerate economic growth in Japan. So it took a while for politicians to break this paradigm that they had, that working on climate change would stifle economic growth. It's now proven over and over it's actually opposite. If we don't work on climate change, we will stifle economic growth. It's probably the best opportunity that we have moving forward.
Paul Pullman, Tom Keene in New York, wonderful to have you on today. I would suggest, Paul, that your work with the Unilever and with Nestle before that, and starting out as a cost analyst at Procter & Gamble a few years ago, that you've done more in big cap multinational on this theme than anyone alive. The core problem we have is the price theory of carbon, the failure of auction markets in Europe. I talked to Chair Yellen about it the other day with a group of 30 over a carbon tax, which seems to be undoable. How do we get to a pricing of carbon that allows nations to interlink to a successful outcome?
Well, thanks for the question. There are over about 40 schemes globally now on carbon pricing, and broadly where that is in place, we see these economies doing better and actually business thriving. Many of the businesses, as you know, already have an internal price on carbon. And the Task Force of Financial Disclosure, interestingly, the highest take-up being from companies in Japan, would very much not only like disclosure of carbon risk in the value chain, but also a price on carbon. It happens to be that in the US, we were not far away from a carbon pricing about 2 decades ago. And there is a proposal now in the House and Senate, which is called the Baker-Schultz proposal from both sides of the aisle, that again would move to a carbon dividend system. So I'm not sure that we would not be able to do that. It will obviously take a little bit of work, but if we don't price in these externalities, we will not be able to move at the scale and speed needed. So I'm more optimistic than your question would suggest. And even in the US, I think some of the Republicans that are now sitting on the fence until the elections will hopefully be willing to be more cooperative after the elections.
How critical is it to have the United States on board? You mentioned to Francine Lacroix here the idea of the United States still not on board. To go back to the Paris Accord, in full disclosure, folks, Mr. Bloomberg was very actively involved in that, the founder of Bloomberg LP and his TV and radio property. But Paul, with that said, how critical is it to get the United States into multilateral agreements on climate?
Yeah, first of all, Mike has played a key role, and you're good to point that out, and we're grateful for that. Also with the America Pledge and the We're Still In movement, which is really rallying states, cities, subnational governments, and private sector behind action on climate change. And thanks to that, we're in a better position than we otherwise would have been. The U.S. role overseas is still very important, and we should not deny that. John Kerry and at that time Barack Obama played a crucial role in pulling some of the countries that were sitting on the fence, pulling them to the right side, and that is one of the reasons that we have a very good Paris Agreement. There is still some work to be done, I think, with some of the countries that America would be more successful with than any of the other major powers. But having now China, the EU, and then hopefully the US on one page will certainly help us create momentum globally.
Paul, thank you so much. Paul Pullman with us, a former Unilever Chief Executive Officer with his effort Imagine on climate as well. Futures are negative 31, Dow futures negative 256, critically VIX back to a 30 level. Francine and I are watching Turkish lira out to new weakness, 8.05. That is a difficult number for Mr. Erdogan. Please stay with us. On the pandemic, Joshua Sharfstein of Johns Hopkins University. We'll do that next. This is Bloomberg. Good morning.
what would you say that the CDC or the FDA or the White House or HHS should have done differently?
Almost all of us have underestimated the dramatic impact of this outbreak.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg First Word News. House Speaker Nancy Pelosi and the White House accuse each other of doing the same thing when it comes to the pandemic relief plan. That is, quote, moving the goalpost when it comes to what's in the actual legislation. Pelosi says the House could pass a bill this week. Still, an agreement with the White House isn't certain, and the Republican-led Senate may not act before the election. And coronavirus cases are surging again in the two countries at the center of the initial wave of the pandemic in Europe. Italy is introducing its strongest restrictions since the end of a national lockdown in May. And meanwhile, Spain also will impose new measures, including a curfew.
Por tanto, aprobamos de nuevo el estado de alarma.
We declare, once again, a state of emergency because it is the most effective way to slow down the contagion curve and keep the virus away.
Germany will consider its next steps at a meeting today. And Joe Biden calls Republican questions about his son Hunter's business deals a smear campaign. The Democratic presidential candidate also told CBS News that the release of documents allegedly belonging to his son may have been part of a Russian disinformation campaign. Biden's claim has not been substantiated. And more deliberate blackouts in Northern California. The state's largest utility, PG&E, cut power to 1.1 million people to prevent live wires from falling into dry bush and starting wildfires. Winds as high as 50 miles an hour swept through an area north of San Francisco. The blackouts may last until tomorrow. Global News 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg. Tom Francine.
Ritika, thank you so much. Greatly appreciated. And now, on the deaths, on the cases, on the hospitalizations, Joshua Sharfstein of Johns Hopkins University. Joshua, we've had a wonderful dialogue with you and your team and other experts around the world on this pandemic. We have learned so much from you, starting in, I guess, the vicinity of February and the permutations of April and May. If I discard a second wave and third wave mentality, and I simply look at the burgeoning cases, how do they fold over to an expectation of deaths to come?
Well, it is extremely concerning because it's obviously not just cases we're seeing. We're seeing a lot of people in the hospital. I was just looking at the stories about field hospitals being built in Wisconsin and other states, Texas asking for the use of military hospitals, Utah sending patients all over the country because the hospitals are full. Those are really concerning signs. Anyone who thinks that this increase is because of testing is completely wrong, because we're seeing these surges in hospitals. And with surges in hospital care, we're going to get surges in patients that need to be mechanically ventilated. And when that happens, there's going to be an increase in death. Now, the rate of death, meaning of the people who are that sick, we can take care of them better. Fewer are going to die. But that means overall, because there's so many cases, more and more people are going to die. So it's really cold comfort that there's a little bit of a less chance of in any individual dying. There are just so many more individuals. So this is a really serious time, and I think the projections that we could go from 1,000 to 2,000 a day are not unrealistic.
Do you have an extrapolation to the number of deaths out there? That's the one thing I couldn't find this weekend except from punditry. And on a medical basis, looking at the literature, can you extrapolate out the number of deaths in the United States?
I mean, that's not something that I do, but there are people who do those kinds of models, and those are the kinds of models that some of the pundits are citing. And so, based on the anticipated spread, Tom Inglesby from the Johns Hopkins Center for Health Security was quoted over the weekend saying something which I think is true. The cases are going up, and we're not really doing that much to bring them down. So we're going to expect them to go up for a while. And when that happens, more people will get sick. And that's what's driving those projections that more and more people will be dying.
Joshua, when you look at the race to the vaccine, there are a couple of things that moved over the weekend. First of all, we understand that AstraZeneca vaccine actually makes an autoimmune response in the elderly. We also understand that J&J, Johnson & Johnson, said the first batches of its shot could be available as January. Is this much needed good news?
Yeah, I think there is some good news out there, and I think the evidence that the vaccines can create an immune response in the elderly is a good step. We don't know for sure that means people are protected. That's what we're waiting for the studies to find out, but the studies should be reporting soon. So, I think that's good. I still wish that we were learning a little bit more about what was going on with the trial from regulators around the world, but hopefully they'll be able to find their voice as these trials come to a conclusion.
Joshua Sharfstein, thank you so much, of Johns Hopkins there. And be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Now, coming up next, we speak with Ryan Williams, the Cadre Chief Executive Officer. We talk about real estate and technology. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, UBS is changing its pay structure to keep senior employees from being poached. Now, fixed salaries will be raised by as much as 20%. At the same time, bonuses will be cut. Well, let's get straight to our Sonali Bazak, Bloomberg Wall Street correspondent. Sonali, when you look at exactly the change, now this is according to people familiar with the story. Our Marianne over in Switzerland actually broke the story. But could it be a new template for pay compensation that a lot of European banks would follow?
It sure can, Francine, and one reason why is because it creates less uncertainty for the banks when it comes to their investors. It creates a lot less uncertainty for the employees at a very uncertain time, doesn't it? And remember, when you look at the U.S., there's already rules around bonuses versus fixed pay, and that has been a very big draw to employees in other areas of the world, like in the U.S., where the U.S. employees have just really liked the certainty from places like Deutsche Bank when they know what they're going to get at the end of the day.
How does it actually reduce poaching? Because I thought, Sonali, that I guess if there's a bonus and it's tied to, basically it's deferred compensation, then it disincentivizes bankers from actually leaving the company.
You have it both ways, right? If they bring the base pay up high enough to get the employees to the level that they'll be comfortable living at for however long they have that fixed pay for, you're okay. But again, if that jump is not high enough, you're absolutely right that the bonus and the fixed pay won't really make a difference for that employee. It's a competitive job market right now, and so that jump really has to be high enough, Francine.
Sonali, let's talk also about investment, especially real estate technology platform Cadre. Now, commercial real estate prices have taken a beating during the pandemic. Some investors, though, are looking for opportunities, and we're delighted to be joined by Sonali and Ryan Williams, co-founder and chief executive of Cadre, a real estate technology platform. Ryan, I mean, we're delighted, Sonali and I are delighted that you're joining us. Do you see prices good enough for you to go back in? So basically what you do is you buy some of the stuff and then you tell investors to come and invest in Cadre. Is now a good time to buy commercial companies or commercial real estate, or are we going to work from home for forever after?
Yeah, well, it's I don't think it's one or the other necessarily. And I think the important point really is to recognize that real estate has historically been the #1 asset class for wealth creation. And a lot of that wealth in the past has been created coming out of periods of uncertainty, periods of dislocation, such as the current one we're in. And the key to success, just like in any other industry, is who you invest with and which kinds of assets they invest. There's going to be winners and there's going to be losers. In this environment, we at Cadre do believe that there will be some asset classes that actually perform even more strongly than they would pre-COVID. Multifamily, residential, for instance, are actually stronger today than they've ever been because people need somewhere to live in an environment where people are home more than ever. The benefits of being and owning in strong residential real estate are clear. Industrial is another asset class that we think is incredibly compelling given, this whole e-commerce trend that's been accelerated and the importance of having, logistics and supply chain effectively digitized. You look at certain asset classes in life sciences office. And so at Cadre, we're focused on identifying the asset classes we think actually will perform even more strongly, staying away from asset classes like retail and hospitality, which to your point, have a lot of question marks and unknowns, staying away from, urban central business district office, which to your point, also have a lot to still to shake out.
Right.
And so it's really, there's going to be a winners and losers, and it's about being selective. It's about having the right platform to build a portfolio because real estate, again, is a great hedge to a lot of the volatility we're seeing in the equity markets today.
Ryan, let's talk about urban spaces for a second here. When you're looking across the country, you have people who are just flying away from the cities. But you have some people, like me, frankly, who are ready to buy place in the city because you're seeing these prices start to plunge. What are you seeing? What's the real story when you look at everything all together?
Yeah, I think it's a little bit of a mixed story in many ways. To your point, there are definitely folks like myself. I'm actually in New York City still as well that are interested in staying here for the long term, that are bullish on some of those unique dynamics that make a city like New York so vibrant, cultural opportunities here, the fact that there is a deep history, that there are so many amenities all centralized. And so I think we're in a period of a little sort of near-term and mid-term dislocation in that a lot of folks are moving outside the city for the time being, but will come back. And I think for those, to your point, who are more long-term oriented and can think beyond the next year or 2 years, I think there are some compelling investing opportunities, especially in residential and a lot of the urban cores and the urban central office. I think that's a space where there's going to be a fundamental change in how office space works, in terms of flexibility and adaptability being key. But in terms of the residential plays within urban centers, I still firmly believe that there's some just unique benefits to being in the city centers that will endure, and that for those who are willing to invest today, there can be real opportunity.
So how do you time it then? Is this the right time then to be investing in urban real estate? Or do you have to wait another couple months?
I think it's market by market, and it's based off which asset class you're focused on. So, at Cadre, we've actually identified, we call it Cadre 15, our top 15 markets. Some are what we think of as almost emerging urban markets, and those are areas where you're seeing prospects for population growth. You're seeing affordability. And those are the markets that we feel more confident in investing today versus markets where affordability is not quite in line. And you can look at a market like LA, for instance, where population growth and income growth are actually trending in the opposite direction. What we're very focused on is identifying, again, the markets where there is unique affordability, there is growth, and staying away from the markets where that's not the case. And so I think it's market by market. You've got to really select and identify where you see positive trends, where you see, investment from city government and the like. And then the markets where you don't see that, you have to stay away from it. And then you need to overlay asset class as well. So residential in the urban centers cores, we like more than office because of all the changes happening. I don't think you're going to see any kind of clarity in terms of pricing across urban office or central business district office, hotel or retail for another 18 to 24 months at least. So we're staying away from those asset classes in major markets in the next 18 to 24 months. We're still focusing on residential, but we're being more selective in the urban markets versus suburban markets.
Ryan, thank you so much for joining us. Ryan Williams, our co-founder and chief executive of Cadre, and Bloomberg's Shonali Bazak. Now, it's Monday. It's the last Monday, or actually it's 8 days away from November 3rd. Of course, it's all about the U.S. election, and there's a lot going on in the market. S&P here in Europe really hurting a lot of the European stocks because it's down some 20% after it said it's going to be a difficult couple of months. Coming up, Tom Keene, Jonathan Fair, and Lisa Abramovitz for more Bloomberg Surveillance.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Much less leverage in the equity market.
This is a market that's thinking at some point stimulus is going to happen.
We have just huge levels of debt, and we don't want to get into a debt trap.
The Fed has a lot of upside to accelerate. I think they're going to maintain this pace.
We are having this income cliff at a time when actually the consumer is supposed to go out and spend.
COVID is the great unequalizer. The strong get stronger, the weak gets weaker.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Equity futures this Monday morning, Dow 31. We're down 0.9%. Tom Keene, a week and a day away from an election in America.
We call that 8 days a week, John. Beatles 6. Come on, get with it. Ooh, I need your love, babe. John, what's so important here is thank you, really? How it's melding together. Happy and whether John, I got up early this morning and I spent 1 hour reviewing the pandemic dynamics. And you know how bad Europe was. You were way out front on that last week. There's been a real deterioration there. Mike Allen, moments ago, publishing for Axios, and he melds the two together, John, the two stories, and he's focused on Wisconsin and Montana as being those swing states with huge pandemic issues.
And yet, where's Biden and Harris going to be this week, Tom? Biden in Georgia, Harris in Texas later this week. Who would have thought a few months ago, Tom, with a week to go until that election, they would be two of the places they would be?
Texas, I agree with you totally. Georgia's always been in the game, and this morning, John, I'd really say Georgia's been front and center. Martin Schenker of Bloomberg really talking up Georgia's key, and also our political analyst in London, Francine Lacroix, mentions that she is focused on Georgia as well.
New restrictions across the continent then, and what are we not talking about this morning? We are not talking about stimulus conversations, Lisa Abramowitz, and this market adjusting lower.
Yeah, and perhaps you can blame the fact that we haven't gotten a fiscal deal. It's worked for the past 2 months, so we could try that again. I will say this is such a huge week with 8 days to the election, with the virus spreading and big tech earnings. The data this day, pretty soft, I mean, in terms of the importance of it. I know you're going to make fun of me for this, John, but here we got to have it said. 10 a.m., we are going to be getting U.S. new home sales. Expect a deceleration in the full number based not on a lack of demand, but rather a lack of supply. People are staying in their homes, and a lot of people want to buy them. Also today, China's top leaders begin meeting to chart economic plans for the next decade to 15 years. The expectation, if China stays in the trajectory where it is right now, it will surpass the size of the U.S. economy within the next decade. So it's really important to see how they're going to get there. Also today, the Senate is going to vote to confirm Amy Coney Barrett to the Supreme Court, Mike Pence presiding over that, despite the fact that 5 of his closest advisors did test positive for COVID. He tested negative. He is not quarantining. An interesting dynamic at a time of such a rampant spread in the pandemic, John.
And then we can have some talks about talks at some point later this week. I can hardly wait. Here's the price action this Monday morning, shaping up as follows on the S&P 500. Equity futures gapping lower early this morning at the European Open. I was here for that. Equities lower there as well. Equities down here. I was here for that. I'll be here for this one too. Equity futures down 30, off by 0.8%. In the bond market, there's your bid. Yields back in 3 basis points. Big bid across the continent in Europe as well. European government bonds rallying. And in foreign exchange, just dollar strength more broadly, Tom, through G10. The euro back down to 118.25. Some risk aversion this morning, Tom, to kick off the trading week.
Yeah, I don't want to oversell it. I don't know what Mr. Laidler is going to say here in a moment. But, John, I looked at the pullback, if you will, that we're seeing in the market, and it only gets you at worstest, like the NASDAQ 100, to a center tendency of the recent volatility. There's not a lot of gloom and doom on the tape. It's just sort of range-bound center tendency off this morning.
We know what Ben's going to say. He's going to say buy. But he's going to say buy cyclicals. Let's bring it in right now. Ben Laidler, Tower Hudson Research CEO. Ben, great to have you with us, sir. That is a change, Ben Laidler. It is not just about buying growth equities, getting into some cyclicality. Why, Ben?
Because I think the election has held people back. I think all this talk about are we going to get fiscal stimulus or not has just been a huge distraction, has held people back. We're waiting for a vaccine. We don't have that yet. I think, roll forward. Let's get the election out of the way. Let's get a bit of certainty there. And then let's look forward. And what does that look like? 2021, you're going to get 3 to 4% GDP growth. You're going to get 25% earnings growth. And you're going to get a mountain more than that of these sort of deep cyclical stocks. People, until very recently, have basically been ignoring. And I think those are the sort of the big beneficiaries of the vaccine, which we're going to get some more fiscal stimulus. I think we're going to get something. Biden wins and it's a blue wave. We're obviously going to get a lot more than that. I think these are the sectors of the market which are cheap, which are out of favor, and have just huge operating leverage to this sort of base case scenario that I have from here. And it hasn't really moved yet because I think people have just been very distracted by by this fiscal stimulus talk and the election and everything else.
Ben, the challenge of people trying to catch up with Ben Laidler is on an absolute or relative basis. Do you shift? Do you shift away from big tech and tech completely, or do you do both together and still own both areas?
Yeah, I mean, I think you bring down those sort of quality growth, sort of big tech, healthcare a bit, but I think that we're talking different instruments here. I mean, I think the tech is just a very natural story. It's with us for a long time. It's going to continue to look very good with these balance sheets, with these structural growth outlook. But absolutely, I mean, it's where everybody is right now. There needs to be a bit of a shift. But the sectors I'm telling people to shift into, industrial, small cap, real estate. I mean, these are pretty small sectors. A little bit of money is going to go a very long way. And I think you're going to get an awful lot of bang for your buck. Just because, I mean, just look at what's going on in third quarter earnings right now, which we're all sort of ignoring because there's a lot else going on. These cyclical sectors, industrials, energy, have beaten expectations by, over 100% so far. I mean, you're just getting huge operating leverage on the upside.
There is, of course, the counter argument that the pandemic is accelerating and worsening dramatically in Europe and in places in the United States with a record number of cases, and that we're not out of the woods. Even if we get a vaccine, the rollout's going to be complicated. The efficacy is questionable. So how long can we stay in this environment with a pandemic still very much present and pushing people away from the public realm? How long does that have to go on before you change your view?
Yeah, I mean, I think the relative surprise, and which has certainly given me, a lot of hope, has really just been the resilience of the consumer, the resilience of the economic activity. I mean, we just had a US PMI for October last week at 55. I mean, very expansionary. Savings rates sort of 14%. Retail sales are sort of back to pre-pandemic levels. I mean, we're in pretty good shape here. I mean, I'm not naive enough to think that